Hey YouTube, this is Brandon Respers again, coming to you with a few tips for you as a home buyer, right? So if you find value in this video, please click that subscribe button. If you're a cash buyer, this video again is not for you. It's for people who need a mortgage to get into their home, right? So just a few things not to do. I'll talk about what to do in another video, but things you really don't want to do between the time you get pre-approved for a loan and the day you close that loan, okay? So closing day, where you actually get the keys to the house and you move in. So one thing you don't want to do is to purchase expensive items or increase that credit card balance, okay? The reason is you're qualified as a borrower on a profile, right? So you want to make sure that profile stays consistent between the pre-approval or the approved eligible from the underwriter through the time you actually get the keys in your hand. So it's not the time to buy a new car, right? Not the time. Not the time. Not the time to go to Rooms to Go and load up on furniture that you want for your new house, or go to Home Depot and get that refrigerator you've always wanted for this new house, right? This is the time to be consistent, to be what you were when you got pre-approved, because your approval is based on that picture. And if it changes, say they run a credit report, run your credit before closing just to make sure you're consistently the same person. You want it to be the same, okay? You don't want that DTI, that debt to income ratio, which is basically if you took your monthly income and you took your monthly debt obligations, how much of your monthly income automatically goes to those debts, right? Those minimums, not how much you want to pay, how much do you have to pay? It's a big part of the equation for you getting into a house. Number two, don't assume you need 20% down. There are a lot of buyer programs that will help you get into a house for 3%, 3.5%, 0% depending on location, 0% if you're a military veteran, right? You don't necessarily need a down payment. There are other things, like there are lenders who might have a special program that helps you with the down payment. There are state programs, there are agency programs. Don't assume you need 20% down, okay? You might need way less than you think. You might be closer to that home than you think, okay? Number three, don't change careers. Again, when you get that approved eligible, this is the time to present a consistent picture. You got approved based on the career you had. You got approved based on the consistency of employment and the consistency of income. We don't want to create a picture that anything is going to be less than consistent, right? So I think number four, 1, 2, 3, 4, shop your lender, okay? And as a mortgage loan originator, a lot of people would say, man, you want to do whatever it takes to deter people from shopping you. But I'm telling you right now to shop your lender. A lot of the bigger banks might be, they might not be, but they might have fees that are more expensive, right? They don't have to do the hard work to bring in customers because they have people walking through the door every day. They have a relationship with these people. They have trust with these people. Why in the world would the bank I walk into every day charge me more? Why? Right? And two, as a person who works with lenders, right, the pricing is different depending on who the lender is that day, right? Some days, some lenders win. Some days, other lenders win. There are advantages to working with a mortgage broker who has access to a bunch of lenders, right? That way they can price the market for you and tell you, hey, today so-and-so's winning. I have access to all these people. Today so-and-so's winning. This is the best deal in the market that I can give you today. If you can find it somewhere else, good. That's good for you. Find it, save your money, protect yourself, okay? And then things to do after you get that pre-approved, after you've shopped the lender, after you've found the best deal you can make, right? Don't make big financial decisions. Don't make any huge changes to your profile unless you talk to your loan officer, or unless the underwriter says, hey, this needs to happen for this loan to close. And they'll tell you, they'll say, hey, look, you're about $3,000 or $4,000 or $2,000 or $1,000 on DTI, on debt to income ratio. We need to balance this on closing day so that we can, on the day you close the loan, it's about the profile that presents on closing day. On the day you close, you fit the profile of the product. You fit the profile of the interest rate that you locked and the pricing that you locked. It's very important that you think about yourself as a picture. This is a resume, right? So be consistent in that picture you're painting, unless the painters, which, I mean, I'm a loan officer. I don't make the picture. The underwriter tells me, hey, this has to be the picture. for us to close this house, right? Wait for word from your underwriter, wait for word from your loan officer before you make any big changes, especially once you get the conditions. Like, the conditions should state what changes need to happen. So don't get creative on your own and change anything significantly from the moment you got approved or the moment you got conditions, or like just, again, think of yourself as a picture, a profile, an avatar, right? In the system. And we want to make sure that it's consistent. All right. Unless otherwise instructed. All right. Trust the lender to have your back in the process once you found that lender that has the best pricing available for you in that market based on who you've connected with. Hey, I hope you have a great day today. Thank you so much for your time. Again, hit that subscribe button if you found this video useful, and take care.